Good morning, everybody. It is a beautiful day here at Option Pit, and I hope you're all doing well. It is good to be around. I am Mark Sebastian. I am the founder, of OptionPit.com, and we're going to be celebrating our 5th anniversary here in about 2 weeks. So we were founded on April 1st, 2010. Officially, so we will, which makes sense if you consider it's April Fool's Day. That makes tons and tons of sense. So, now unlike now, the good news is we are not a would-be finance star charged with stealing. All right, we are a would-be options education firm charged with teaching too much and being too great. So. We're going to have, we're going to have an event on the 31st. It'll be in the events calendar soon. Pay attention to that. I've just got to get some stuff developed to get that set up. All right, folks, let's talk about the market. Well, we had some really bad housing starts, really bad, down 17%. And, they're going to blame this and that. But the fact of the matter is that's kind of the craziness. So, maybe no change in language. Who knows? But you give me these economic readings and you tell me that rates need to go up in June. Explain that to me. All right, and that's what I think is kind of nuts, and that's what I think the market's trying to figure out. All right, we had what I thought was kind of an unnecessary up day, and now here we are, followed by a unnecessary down day. So really, we could have just been sitting here, right? We should have just had no volatility. Even if it is, who cares? All right, we should have just had no volatility as opposed to basically grinding wheels for the last, grinding wheels. So that's kind of the what's been kind of interesting is how much we're just sitting here grinding. I saw an interesting thing with the market down in the year. 55% of mutual funds are beating their benchmark. Think about that. In a year where it should be relatively easy to beat the benchmark, only 55% can do that. That's why learning to trade on your own, I think, is such a valuable thing. Or for me, learning to trade on my own is such a valuable thing because I'm not relying on a bunch of mutual funds to invest for me. Even my personal feeling is a even semi-active investor can beat most mutual funds, especially net of fees. All right, maybe even if you match most mutual funds at the gross, the payout's better because you're not paying 1.5–2% to the mutual fund, and then there's a lot of fees embedded that a lot of people don't realize. All right, so do your research. All right, so now let's talk about American just crushing it, and actually all the airlines on this oil route have really benefited, and they're getting to the point where it may be time to start looking at, is it time to allow to maybe not play this? Is it time to maybe not play some of the are some of the airlines a little over toasty? Would be my question. All right, you've got. Obviously, Delta or American out of the S&P, that's a big move, but a lot of these names have been doing really well. And, you got to wonder, with oil making this move, actually, an interesting play with oil making this move is look at the lack of movement in the airlines. There may actually be a trade starting to develop in terms of kind of a short vol trade in those names, something along the lines of an Iron Condor. That's crazy. Now you've got, the market down, VIX up. VIX futures really not moving around very much, and that could be kind of that I think is just kind of interesting. Other names kind of moving around. Look at VIX and VXX, or VXX and UVXY. And what you'll notice is that they're now almost entirely, they actually are entirely April. So there's no real roll yield to them. And so as April goes, so go those. And you know, that is that's kind of the way that things have traded. You know, XHB is one that I've kept thinking was going to be a huge leader into the back half of the year. And with these readings, it's unbelievable that this thing could underperform that badly and that housing could be that bad. But there are still some good names. All right. You know, instead of doing one of those, maybe a Toll Brothers makes more sense. That's been a strong leader. And, you know, KBH has been okay. But Toll or, you know, Lennar. Anyway, Elian, thank you. Yeah, Lennar might be another interesting one to look at in terms of, you know, a housing play. But on the day, you know, we're going to spin our wheels here and not a lot's going to happen. And, you know, and it will be frustrating. And I would probably buy this dip because I think people are starting to figure out the Fed. All right, folks. On that note, I hope everybody has a great day, and I will be back in a few minutes. You got questions, you can call me, 888-TRADE-01, or email me, marketoptionpit.com. Talk to you soon.